What's going on, everyone? We're going to take a look at Apple. So Apple is currently flat on the day. We're only up 18 cents, currently trading close to $172. Now, we had CPI numbers come out this morning. We had a very aggressive explosion off the open in that pre-market. Anyone who did hold calls overnight, I hope you guys sold on the open. Remember this, a rule of thumb is that if you do swing anything overnight and we have a gap up and you are in calls, make sure to sell out. There's no, guarantee that it's going to continue. If you buy puts and you're playing to the downside and we gap down, do the same thing, lock in those profits, relook for new supply and demand zones, and then intraday trade them as well. So as we kind of get into the day's day today, now Apple has just broken through our 5-minute 200-day moving average. Okay, so if we kind of look at this floor going all the way into the pre-market here, we held, kind of a double bottom twice, in between the zone of around 172 and around 172.50s. Each time we got into this zone, and I'm actually going to make this a little bit of a intraday demand zone here by putting a little bit of a box here. Okay, so intraday demand zone here, I'm going to make this green. What we're going to do is that, okay, so you can see as we came down into this area of support 2 times, we got an aggressive bounce. Now back up to the upper supply zone. Our supply zone is still on Apple between 173.80s and around 174.40s. So this whole area right now, until we clear this out, needs to be looked at as a short opportunity. Okay, so as we broke down today's lows, anything below that, right, needs to be looked at as a short opportunity. So if you did take the loss of this demand zone and the loss of the 200-day moving average, you would be getting stopped out if we do close back over this last demand zone. Okay, so what we would be playing for now is going back to Monday and Tuesday's kind of support down here into 171. So currently trading at 171.95. We've got maybe about $1 worth of room that we're looking to play. Again, you don't need to hold for the whole dollar. Just kind of take your profits along the way, because I would expect a bounce in this zone between 170.60 and 171. Get into this zone here, play calls back up to the middle of this zone, and again, hold the runner in case we do continue to break to the upside here. But the way you're going to play these supply and demand zones, when we are stuck in a tight range like we have been on the overall NASDAQ 100 for almost 2 weeks now, we want to be selling puts at the top. We want to be buying calls at the bottom. When we do have intraday levels like this, we want to play even tighter, and we want to be buying calls at those demand zones, and we want to be selling for profit as we run into the next supply zone. We're not really looking to play breakouts until we break out of this zone that we've been in now for over a week's time. Okay, so just kind of keep that in mind. So what I'm looking for here exactly on Apple below this 172.20, which is a 200-day moving average, I'm looking for an aggressive push down. NASDAQ futures have just went red. Okay, so we were currently up close to 100 points, or just a little bit more than that, and now we've kind of given away all of that CPI gains that we had in the pre-market, and now we're flat, and now we're red, right? So if I look it up, the NASDAQ futures, we are currently green by $4. So essentially we're flat. So we've given it all back. We've broken through the levels of demand now. I would expect a continuation here. Now, if you do get a little bit of a push, right? If you do get a little bit of a push back into this demand zone, look for it to get rejected here. Okay, continue to hold those puts, because if we do get rejected, consolidate, and then we would be working on that leg down into the 171. Now you would get stopped out, and you would use your stop if we do have a bounce that then stops in our previous demand zone and then breaks through. So you would get stopped out here. Okay, so just kind of keep that in mind as you're playing your calls and your puts here. Don't want to get caught with your pants around your ankles. What we would essentially be looking for, okay, what we would essentially be looking for here for tomorrow and for Friday is, if the market continues to sell off, we're looking for the 171 to 170.50s. We want to clean up our position there, and any close that we get below 170.50, we're going to want to see that confirmed. So maybe go to an hourly time frame chart, right? So if I look at my hourly time frame chart, if we do start to break below this level, and I can actually scoot this up a bit, if we actually lose this 171.5 area here and we close below on an hourly candle, we would look for the preceding hourly candle to confirm the new lows and then play that down into 168.50. that would be taking us out of this range that we've been in for the last 3 days. You can see when Apple really had this explosion going back to last Friday all the way into highs of 174, we've essentially been bear flagging in between 174.30 and around 170. So we've been in about a 4-point range for the past 3 days now, 4 days actually. So we can't really buy calls for the breakout until we clear out 174.30s, or we can't really hold those puts until we clear out that 171 to the downside. So even as we come into this demand zone here, make sure you're taking your profits if you are short, and then you're going to want to rebuy calls for the potential bounce into the middle of the zone. And then you would look for us to get rejected around 172 again to then come down in the bottom. So again, to everyone who's watching this video, thank you guys. Make sure to like, comment, subscribe if you guys want to join the Discord. That link is down in the description box below.